Everybody, welcome back to the One Step Better Business Podcast. I am Mike. This is Matt. And we are both super glad that you have tuned in for another great, wonderful, fantastic episode. You may, if you have ever owned or ran a business and sat down and talked with anybody about your financials or your taxes or whatever it may be in the finance world, you've probably heard the terms cash or accrual. And so we're going to shed some light on why this is going to be something that actually really does matter to you and hopefully give you some ideas on, am I doing this the right way? So Matt, Patrick, welcome in.
What's up, man?
Doing well, man. Before we get started, got to ask you a little bit more. This is supposed to be a lighthearted question, but for some reason, our podcast producer keeps picking like real topics that we're soul searching ourselves for. So can you think of a moment where you became the voice of reason in a situation?
Mike, anytime I open up my mouth, it's truly, I am the person, the voice of reason. Let's just start with there. There's never a moment because it's always true. No, I don't have one. I'm
okay using humor to deflect the real answers.
Yeah, I don't have one here. I mean, I find myself to be logical, but hot-headed. So I would imagine I'm very rarely the voice of reason in the room.
Are you the one that causes the voice of reason to rise up?
Correct. And if I talk louder, that's more reasonable, right? That's usually my answer.
I'm going to drown out the voice of reason with my volume.
Yeah, if I don't get my point across the first time, if I say it louder, it's clearly going to be better.
I always heard the more aggressive you get, the more people listen.
They'll have to listen because it's louder.
Yeah.
How about you, Mike?
Any conversation I've ever had with my wife is the voice of reason.
Not true.
No,
not true.
I mean, I don't know. I'm sure I do get to be very logical, and I'm pretty grounded.
Your gift is discernment, so I find that to be
it's a little bit easier.
Yeah, mine's not.
Yeah,
my gift is not discernment. I will say, when you say the voice of reason, when we are coming back from dinner with your wife and she's already ordering appetizers for the hotel lobby, I'm not sure your voice came through there, but maybe it did because you knew she's going to order them anyway. So you're like, go ahead.
So here's the secret. I don't think Meredith listens to this.
Meredith, I love this is earplugs.
Yeah, if you are listening,
turn off.
Stop. So the goal is, I know that anytime that we end a meal, my wife is thinking about the next food item, snack, whatever it is. And so if you give her options, then she'll pick the options, which then helps me be in control of what happens next.
Yeah.
So like when we're leaving, it's just like, hey,
are you sure we don't?
Do you think you want pizza or Taco Bell at midnight tonight?
Yeah.
It's like, you know what? I'm gonna get Taco Bell, or I'm gonna, whatever.
Yeah, you're forcing
the decision.
Yeah, we want ice cream. I want ice cream, so I'm going to talk her into ice cream. I understand.
Yeah. So that is.
Then I am clearly the voice of reason at all times, Mike. I think we need dessert. I'll order dessert.
Yeah, I think today you were the voice of reason because you said JC from our team is here. She lives in South Africa, and so she's here this week with us. And you said, you got to have Chick-fil-A fries when you come to America. And so you, out of your voice of reason, went and got Chick-fil-A fries.
And a peppermint shake for her.
Yeah, well, those aren't that great.
They're okay.
I don't like peppermint. So, but the fries, that was a true voice of reason moment. So
yeah, like you can't have, I think we messed it up. They gave her nugget choice in some kind of new shaved chicken deli thing.
Yeah, I've never seen that.
That's not a thing.
Yeah.
You get a fried chicken sandwich. Yeah. What are you doing? We're doing it wrong.
No, those nuggets are good.
The nuggets are great. They're a good appetizer.
for your main course.
Yeah, you get
a chicken sandwich.
What are you doing?
Yeah,
that's like funny. Mandy orders a salad there. I'm like, you're so doing this wrong. Yeah. You don't order a salad from Chick-fil-A.
I'm not mad at you for ordering a salad, and you also get a chicken sandwich and French fries.
Correct.
Yeah, you got to make this is like a 3-course meal, Chick-fil-A edition.
Chick-fil-A's the best.
This episode is sponsored by Chick-fil-A.
And Dr. Pepper.
Welcome to Fansville. All right. So cash versus accrual. Here's the danger of us talking about this. We can nerd out on the accounting piece of what is really cash, what is accrual, and we don't want to do that.
My phone is ding, ding, ding.
That's fine.
Shouldn't be doing that.
My guess is y'all don't even pick up on that noise.
Do you hear the ding?
Push out.
Sorry. I put on Do Not Disturb now. It's good.
So one of the things that we definitely want to avoid here is nerding out on like the technical definitions and technical words.
For sure.
We want to try to provide some insight, but I do think that I know for a fact that cash versus accrual for a business owner is something that they've been exposed to, presented with, and probably are a little bit uncertain on which is right and why, which is the more important part, why that matters to them. So that's what we're going to talk about today. We're going to look at this from an accounting perspective, but again, we're going to try not to nerd out. So,
all right, we're gonna get the
hopefully.
T charts out.
So,
Get
yeah.
us
When you think about the
old school
debits and
green
credits,
green ledger book for you guys. This would be great. No, we're not. We're
so
gonna try to avoid that. What I found interesting as we're talking about this topic before is you thought of immediately one side of this
yeah,
equation. I immediately thought of another. I also know how we kind of solve for both as a practical solution to give great insight, but also make sure from the tax standpoint. So I thought it was interesting that you had a different, like, where you went with this topic was different than I went with this topic. So that's kind of where.
yeah. My first thought, there's two primary areas that we're really thinking about, cash versus accrual, and we'll explain a little bit about what that is. But I think about financial statements and the accounting function first as a mechanism to provide insight to business owners or leaders about the inner workings of their business from like a financial standpoint. And so because of that, I thought my first thought was cash versus accrual is, am I preparing my financial statements on a cash basis or accrual basis, which then turns into how I'm getting insight into my financial statements. You took a different approach, which is, one of the outcomes of producing financial statements is we have clear insight to be able to turn that into a tax return. And whenever we're filing our tax return, we are going to indicate whether or not these returns have been filed on a cash or accrual basis.
Correct. And just to kind of define this real quick, just so we set a very low very low baseline for make sure we understand. Cash basis, all that means is you're going to pay tax on what you've physically received and physically paid. And ideally, that makes a lot of sense from a tax standpoint. It is a terrible insight into your numbers.
Yeah.
Because it doesn't actually tell you if you didn't pay rent for 6 months, I don't have an expense for rent. It's great, but damn it, I still owe the rent. That's a big deal. And likewise, I don't want to pay tax on money I have not received. So I don't necessarily always want to report on an accrual basis. Accrual bees means based on what I have, I'll use the base term, invoiced and expected to receive or been billed and expect to pay. So that is a lot better picture from an inside answer, but not always a great tax answer. So depending on your industry, depending on what's going on, we always try to hedge this a little bit both ways. All of our clients here at the firm, we're going to report as close to accrual as we possibly can based on the data we have, because that's going to give you real insight into your numbers of like, hey, I invoiced this. I haven't collected it yet, but I know I also got this bill in that I'm going to end up paying when I do collect it. I need to know that true net of all those things. The downside to that is if I was reporting it on a tax basis, I'm going to have a big problem. I have not gotten that money.
Yeah.
I may have billed a huge amount, and therefore I going to pay tax on money I haven't got yet, which is sucks. That's a terrible
Nobody
answer.
wants to do that.
Correct. Now, there are certain industries you have to. If you have inventory and you have physical inventory in your office, you're going to have to be on a accrual basis for tax. That's the rules. Sorry. If your sales are too high, so there's some gross receipts tests that say if your sales are too high, you have to report for tax on accrual basis. Most of our clients are well below those limits. If they have inventory, we're going to put them on accrual for tax, but there's a lot of planning we can do around that. But when I think about this, you were right. And my old tax hat was still on when I thought about this topic. So when you think about this from an insight standpoint, why should that client care that the information they're being given is on accrual, or what I'd say is a modified accrual basis?
Yeah. So I think you explained that well. When we think about an accrual basis from a financial reporting standpoint, realistically, what we're looking at is what can I reasonably expect to happen based on what I know to be true. So if I know that I today went and cut somebody's yard, then I know that I'm going to invoice that customer. And then I know that that customer I'm reasonably expecting them to pay me money. So I want to be able to record, I worked today and I generated revenue today. And so on a modified accrual or accrual basis, my financial statement would show that I have $200 of revenue because I cut a yard and invoiced somebody for $200. that then allows me, not, micro example, allows me to follow up to know in 3 months, wait, I didn't get paid my $200. Where's my $200?
Yeah.
And I might make a decision to write that off, or I might
I'm
need
gonna
to go
go break
collect, or,
break
whatever it
some
may be.
kneecaps.
Yeah,
Whatever you gotta do, Mike. Come on,
we're
man.
gonna go take the bats to the knee. So
Give me my $200.
whenever I'm thinking about all of my inputs into my financial statements and what can I reasonably expect to be true, I want to capture everything that I can really predict and know. And so it's a better, in my opinion, it's a better picture at trying to use accounting to look out the windshield a little bit, because we know that accounting is primarily looking in the rear view. What did happen? What did occur? But accrual gives us that picture, and it also allows us to think a little bit ahead, not too far ahead, but a little bit ahead about what's coming up.
Even if it is looking at the rearview mirror, it's giving me a better. I got a clearer picture of the rear view.
Yeah.
And so, use your example of that lawn care guy. Let's say I had an employee and who was working in that yard today. I probably want to make sure the cost of me paying that employee hits today.
Yeah.
Right. So I'm going to accrue those wages and so I get that expense this period. If I was on a cash basis and we're at the end of a month and I paid that payroll next month, I may have income this month with expense next month. So this month, this financial looks great. Next month looks terrible.
Exactly right.
And so all that stuff, and I had to go buy gas today, but I didn't get my gas bill until next month. But the truck note I got, like, it's not, I'm not really painting a good picture in
Yeah.
either month. So neither one's really useless.
If you think about accounting, really, it is we're trying to match up income and expenses. That's really what we're trying to do.
The timing
The
of when they
timing of those
actually,
things.
the real date they happened, not when you actually spent the money or received the money.
Yeah. Or when you just decided to sit down and actually put these numbers together.
Correct.
Right. So when we can line up the expenses as close as possible to when the revenue was generated, that gives us a better picture of our financial activity. And in some ways, when we tie that to different KPIs, some measurable scorecard type stuff, we can actually start to track our success and what we're doing well and what we need to improve on. That's the whole goal of accounting.
Right.
Just the financial reporting side is I need to have better insight into my information.
Yeah. And the challenge this is, if you're a really small business and let's say I'll use a restaurant example, you go to a restaurant, people are paying you right away. Like that's great. But that food vendor may be billing you on terms.
Yeah.
Your labor is clearly not getting paid every day for labor. So your expense and your labor expenses by habit. But now you started doing catering and those are going to be corporate and you're going to invoice them and collect. Or, hey, you have 2 or 3 days between when you're going to get the money from a credit card company or from that third party, Grubhub or Uber Eats or whatever. So there's some timing differences there. So we always want to report stuff of what really happened in this time period that we're looking at. So then you can actually make the decisions. Yeah. So if I was looking at this and I said, well, my food costs hit next month, man, my food cost was great this month. I didn't pay any of my food bills. I didn't have any problems, but the reality is I overpaid for food. I won't know that if I'm running a cash basis. When we see people doing their own books, a lot of times they're doing this, us say on the cash basis, because they're just trying to keep up with where did the money go, where to actually spend the cash.
Yeah.
And that's fine, but you're not going to get any value out of those financial statements. It's going to help you with accumulating your crap for tax time. It's going to accumulate to have some ballpark of what was left after everything's said and done. But you're not able to make any decisions based off those numbers.
So extreme example there, right?
Yep.
Let's pretend, and this is not realistic by any means, but I think it'll paint the picture. Let's pretend that we are that lawn care company, and so on November 30th, the last day of the month, we went and cut a bunch of grass, and so we invoiced, and we are showing $10,000 of revenue in November, and then on December 1st,
I paid payroll.
We paid payroll, and that cost $8,000, right? So if I pull a P&L for November, I'm going to show $10,000 of income, 0 expenses, $10,000 of profit. And if I pull a P&L for December, I'm going to show 0 income. I'm going to show $10,000 of expenses,
8,000
or whatever I said it was, and a huge loss. And again, way extreme example. And that's not how it always works out, but it shows that whenever we're looking at financial statements over a period of time, we want to try to capture as much realistic, reasonably expected things inside of that period of time so that our numbers are reasonably right. We can make decisions.
Yeah. And so when we are working a lot of times with a new client, what we see is they haven't really put any thought into this, is why we think this is an important topic. Hey, you can get somebody just to show you what happened in and out of cash, but that's not the full accounting picture that you need to see to make decisions from. And it's important that you understand what is being done in that process. So part of our, of our process is, how are you going to handle recording the bill that's owed to the supply company if you're that lawn care business? How are you going to show the receivable of, well, I just did a handwritten ticket and I put it in this folder, and then when the cash come in, I put it in the bank, and I want you just to report that income. Well, that's great. Who owes you how much money? We don't know. And so we want to have a very clear picture of that. The bookkeeping piece of this is an extra 2 or 3 steps, which is going to take more time, which costs more money, but it becomes useful data.
Yeah.
Not great, I got my stuff ready for tax time and I'm ready to go. Like that doesn't help me very much.
Yeah.
So, when we bring on a new restaurant, a lot of times we'll see that there are on cash basis, and we go, it makes sense for revenue that you're on cash basis, but you're not capturing all these expenses for food in the right month. So then we're looking at this month going, you had a great month, you had a bad month. You had a great month, you had a bad month.
And that same restaurant that is on cash basis has probably been talked into having period financials to get good comparatives whenever they're not actually using the right underlining data to get those.
Or they're going,
so
my bookkeeper sucks. I don't feel like I'm making this much money this month. I didn't think I made this much money last month. I don't use any of this data because it doesn't really mean anything to me. Well, then you're just paying to get your stuff accumulated. Well, that's not really beneficial for anybody. Yeah. And so that's where we jump off from them. The side that we haven't talked about is, so when we bring a new client for reporting purposes, giving them a financial statement every month, we're going to give them what we call a modified accrual. There's some things that we're not accruing for every month. You could have insurance and you pay that insurance over 10 months, not over 12 months. We're not going to accrue that for every client, depending on the expense of whether or not it's material or not.
If it's big enough.
If it's big enough, we're going to accrue for it. If it's not big enough, it doesn't make sense. It's not going to make it. You're not going to make any decisions.
Yeah, it's not going to matter.
We're not painting a bad picture, and you're not making decisions based on it anyway. That being said, so we're going to report on an accrual basis for financials. But for tax, we're just going to take the best method that we're allowed to take, and we will make those conversions at year end to make sure we are capturing and paying tax on the legal amount that we're allowed to do. And that's not 2 sets of books. That's an adjustment we make for tax reporting that's perfectly legal. And so that allows us to get reporting right and the tax right. And so when you say, well, we'll see a tax return that says your cash basis, that might be right for you, but we're still going to issue you a accrual basis financial. And I think if I own a small business and I'm paying for a service or having a bookkeeper in house or whatever, I want this piece of paper to mean something that I can make a decision from. If it's not doing that, you're probably, for better words, you're half-assing this. You got to go all the way whole asset. You got to get it to the right spot so that you are able to see something and make a decision from it. Yeah. And if you're not doing that, you got a problem.
I think that's a good point. We believe strongly in financial statements are pictures that need to be understood. They're not just sheets of paper that you get. And if you don't know how to read it, you need to ask the questions on how to read it. You need to know what it's telling you. You just need to understand that stuff. So that's part of why we talk about this stuff, is to try to educate on why it's important. And so, I think you make a good point that I may want to report one way for tax and the other way for accounting, because it's not as clean cut as just always do this.
Yeah. And you may be paying a bookkeeping service or your bookkeeper is doing a cash basis. And if you don't care about making decisions from your financial statements, you're getting what you paid for.
Yeah.
And you're perfectly fine. But if you actually want to make decisions off of your numbers, you have to do the extra step.
Yep. Good point. So hopefully that gives a good teaser, or at least teaser is not the right word, a good groundwork on accrual versus cash. I would say that if that's not something you've ever thought about or considered, it's probably worth picking up the phone or sending an email off to whoever's doing your bookkeeping to ask them how this is being done. And if the answer isn't something along the lines of it's cash basis and here is why, or it's accrual and here is why, probably makes sense to dig deeper into that stuff. So
yep.
Thanks for listening. Hopefully you have a great day. Make sure that you click the like, subscribe, all the fun things that really helps us out. And we appreciate it here on our end. I don't know if there's anything we can do for you. Make sure that you reach out.